Hey everyone, today we're talking about how to help diversify your portfolio against the risk in the US equity market. And we're going to be doing that and talking about how to leverage the emerging markets and the opportunity there today. Before we get started, make sure to subscribe to catch all of our off-market deals and other content only available to our subscribers. See you then. Everyone, Tom Staub here, founder of the Real Estate Investing Academy. Today's topic is one that's pretty important, I think, and I just want to hit on what I'm doing with my portfolio as of today. So today is August 11th, 2020, right? I think when you look in the markets right now, it's all sorts of anomalies and one-offs and, stimulus packages that are affecting things, gold prices at all-times high, forward-looking PE of like 24, 25 to 1, meaning you're paying 24 to 25 bucks per $1 of earnings. You have arguably still a COVID risk hitting the United States far worse than any other country in the world. And you also have an upcoming election that right now is leading towards the Democratic Party. And with that, there are some tax implications to that. If you saw a recent episode I had with Mike Eby, 40 Under 40, we talked about potential implications to a number of tax items, right? So be sure to check that out. So also be sure to subscribe to some of the up and coming podcasts. We have a Navy SEAL coming up here to talk about, the success mindset and how that translates into the business and the professional world. We have Stephen Roach from Yale University who's going to be talking about where the dollar is going. Pretty important when you consider, the potential of deflation or inflation as it relates to your assets and the prices of your assets. And so today, though, I want to talk about one of the things that I preach a lot, right? I used to be, back in the day, an active trader, trying to catch good deals, what have you. More or less, my horizon was 1 to 3 years. It wasn't really the long 5-10 year play. Fast forward to my early 30s, I came across Ray Dalio's strategy of the all-weather strategy. And I'm a big fan of it. It has done well for me, generally speaking. It's mostly a passive process for managing your stock portfolio. I am a believer that wealth can be created through stocks, not just stocks and bonds and mutual funds and all that, but definitely an extra for the portfolio. So when I look at my portfolio, traditionally the all-weather portfolio, again, I have a third of my assets in wealth in that. Traditionally, there's a chunk of the strategy that says you should have 30% in U.S. equities, right? And I think what we're seeing today is an interesting situation. I've always wondered how best can we integrate or intertwine emerging markets, international purchases to essentially diversify our portfolio and capture potential upside. For a long time, I've thought, there's a lot of risk in the international markets, and the U.S. is in really good footing. But when this COVID thing hit, it really made me consider, well, I need to reposition my portfolio to consider the risk that the U.S. has. And again, when Stephen Roach is on and I interview him, we'll be talking about the implications to the dollar and what that may mean. I also think people are generally just globally concerned around the dollar and the store of value of the dollar. I think you're going to see a lot of countries begin to pull away from the dollar-denominated debt or just dollars at all as part of their transactions. It's going to be an interesting situation for sure. So one of the things that I'm doing, and I wanted to let you all know, and again, make sure you do your own research. This is just my opinion. I am taking that 30% in the all-weather portfolio, and I'm cutting it in half. And what I'm doing with it is I'm putting it in an ETF. I believe this ticker symbol is VWO. Yep. So today I have 30% of my equities. 100% of the 30% of the equities in U.S. equities. Ticker symbol SPY, which is an ETF. What I'm doing now is segmenting half of that, or 15% of the total 30%, towards emerging markets. Now, I'm doing this because if you look at what people are paying for $1 of earnings, again, the famous PE ratio, essentially it allows you to understand what people are paying for $1 of earnings of a company. And historically, the U.S. equity market tends to be between $15 to $16 per $1 of earnings. In a bear market, you're down to 10 to 14, maybe even lower at some times. And in a bull market, you're probably upwards of 18. You typically see corrections when it gets into 23, 24 territory. And so right now, again, we're at about 24.5 PE to ratio. So broadly speaking, people are paying around $24 per $1 of earnings. When you compare that to the emerging markets, you're paying about $5 more per $1 of earnings in the US than you are in the emerging markets. So when you look at the emerging markets, and if you look at the ticker symbol VWO, that's what I'm looking at. Very low expense ratio, 0.13%. And they have a pretty good diversification. I believe it's only 15% of their equities are in China. The rest is pretty well diversified across Asia and a number of other countries. And because, so basically you're paying about $18 per $1 of earnings in the emerging markets. And again, I think when you look at where the US is in terms of a risk factor, in terms of how we're dealing with COVID, in terms of the political situation that's up and coming, the tax implications, the massive stimulus, the volatility of the dollar, I think there's just a lot of risk that we're assuming right now, and we're still paying premium prices for these equities that arguably have a pretty tough road ahead. And so because I feel that there is probably more downside than upside in the US equity market, I'm going to diversify right now and put half of my equity holdings in the emerging market. And so that's what I'm doing. Doesn't mean it's going to be a game-changing event, or I'm going to win, or it's going to be a home run, but it's a way for me to diversify my portfolio by finding more value in the emerging markets. And again, if you look at the emerging markets, particularly Asia, they've handled COVID really well. And for that, you can expect their economies not to have as big of a hit as here in the United States. And so I think for me, when the dust settles from the political situation, when we understand where the dollar is actually going, when we have a vaccine in the United States and we can really control COVID, then we'll have a better understanding of whether or not the valuations in the U.S. equity market make sense. And at that point, we can either repivot or stay in place. So again, that's what I'm doing in my portfolio. I would definitely encourage you to reconsider where you're weighted in your portfolio. Make sure you're diversified on risk and across a variety of asset classes. And for any questions, feel free to email me at tom@betterturnkey.com. And again, make sure you subscribe to the channel. All of our subscribers receive off-market deals. They receive invites to events that I host privately. And so it's a good thing to do, but make sure that you subscribe. Until then, talk soon. Thanks. I want everybody to know.